So let's talk about whole life policies. Can you use whole life? I mean, I sort of think that I think of variable as sort of the place to go, but can you use whole life as a way to save for retirement in that
Absolutely, and if you go back and look at, if I had to talk to the 15 wealthiest people out there and say, hey, where's the best place you put your money in the last 20 or 25 years, many of them would say their whole life insurance policy. So it's been a great place to put money. We've actually been in a bull market for whole life because whole life does very well in a declining interest rate environment because the dividends move in the direction of interest rates but slower, and so when interest rates were 10%, dividends were more. When interest rates went down to 5%, dividends were more. When interest rates went down to 1%, dividends were more. So whole life has performed very well. It's been fairly easy to sell because you're in that bull market of interest rates. Whole life allows you to put a lot of cash into a policy and build it for your retirement. Some companies have done things like a custom whole life where you can say I want it paid up in 7 years or 10 years or 15 years, and you can even put more money in there and still avoid being a mech.
Yeah, and let's just clarify that if we're saving this money with the expectation that we might take some of it out during retirement, we want to make sure we get favorable tax treatment, and to do that we have to avoid MEC status.
Exactly, and I think as Ed and I have talked about in the past, if it's for a death benefit, the MEC really doesn't matter. But if you want the money for retirement income, you probably don't want to MEC that contract.
All right. Any other thoughts?
Exactly. The one thing I would say is that in terms of the whole life policy, they tend to perform a little bit better if they are participating policies, but even a non-participating policy can provide a pretty decent package.
Right. Is there a reason, let's say you didn't need the death benefit, what would be the disadvantage of just surrendering the policy? And let's say I wanted to reinvest in a different way, I didn't want to have an annuity. Is there any real disadvantages to that?
I mean, you could surrender. There will be a taxable event on any of the gains in that contract. But then the key is, okay, where are you going to put it now?
Right.
Now if you put it into some stock or bond type investment, or at least stock investment, you could have an order of returns issue. If you put it into some type of bond portfolio and interest rates go up and bonds get crushed, you could have an issue there. So I think if you need it for income in retirement, the lifetime income annuity is very suitable for that.
Okay. Or leave it in that life insurance policy.
Right.
Yeah. Otherwise you're changing the nature of the investment quite a bit. Yeah.
Yeah, you're getting tax advantage in going into the annuity contract that you're not going to have if you go into any sort of an equity investment.
Okay. Now, how about let's switch over then to variable products, also used to accumulate significant amounts of money to use in retirement income.
Sure.
What's kind of different about that?
I love variable life, and the thing is, people, with the markets being bad the last 10 years, variable life has fallen out of favor, and a lot of people don't think it still has a place. I do. I still think there are people who, no matter what you or I say, they're not going to buy whole life. They want to buy term and invest the difference, or they just want exposure to the markets. And the variable life gives you that potential upside, significant potential upside, but it's also got some downside. In the accumulation phase, that's less problematic because average returns matter when you're accumulating money. Right. The problem comes in the decumulation. When you start taking money out of a variable life policy, if the market goes down 20 or 30%, you can quickly run out of money. As you know, in any type of equity investment, when you're pulling money out, the order of returns can just kill you. So for variable life, I think it's great to accumulate. But then when it comes time to distribute, you either have to move that money to a more stable account, like a fixed account inside of the policy, and then you can still take out money tax-free, or that would be a great one to 1035 exchange into a lifetime income annuity to get stable income that you'll never run out of.
Anything that's different about withdrawing benefits or withdrawing amounts from the variable?
Well, you don't have dividends, okay, but you can always withdraw whatever you put in there tax-free. And you can always borrow out above that tax-free. But again, those policies can blow up if all of a sudden the market drops 30 or 40%. I mean, you can literally get a margin call on your variable life policy if you're not careful. So I think variable life has some significant issues in the decumulation side. Okay. But I think it has a great spot in the accumulation phase. Yeah.
Terrific. Thank you.
And you can always 1035 it to another type of life insurance policy or to an annuity. So you're not stuck with the variable in the decumulation phase if you want to change horses.
Yeah, and I guess you were talking about it being good in the accumulation side, and we might be establishing these plans at a fairly young age. I mean, we see a lot of variable policies, I think, in Section 162 plans that are being used for accumulation. In which case, you may very well want a diversified portfolio, want significant equity exposure.
And for younger people, I mean, even juvenile policies that people start when they're young and they can pour money in and the market goes down, that's great. If you're 7 years old and the market's at all-time record lows, that's perfect. Just start loading money in there because the markets do go up and down, and over time they've always gone up. And so the younger you are, the more you can weather that, and you can take advantage of the upside of the market. The older you are, the less you can weather it, especially once you start taking money out. So I think it's great for accumulation for younger people. And then, but whole life has been a great product for many people over the last 25 years.